Oh, okay. Thank you.
Yes, sir. I just screenshot what you are doing to the group now. From It's not from our own side. It's not from our own side. Ah,
I can see this.
I can see your screen here.
I think it's your network. I had the same issue a few minutes ago. I had to log out and log in again.
For now.
Wow.
if I log out, I can't log in again. I know I have not been. This is not the first time I'm using this thing. Can't log in again. If I log out like this.
Sir, why is the beginning below and the ending on top? Yes, yes.
Yes. Yes, sir.
Calculation is no more showing on your screen. Okay, it's not showing.
Yes, yes. Thank God we have through with our PP schedule. Okay.
Please, sir, how do we get the 8,600? Please, how do we get the 8,6 million?
Yes, sir.
Hello, sir. Hello, sir. How do we get the 8.6? Yes, sir. Yes, sir. Yes, sir. Yes, sir. Thank you.
Yes, sir.
Yes, yes, sir. You said some. Yes, I can see your screen now. I can see your screen now. Yes, that's what I'm saying. I can't see what the Excel you are using. That's the yes. That was what you are showing then. That's what I'm saying. No, maybe that's not what I mean, sir. Sir, you said something concerning assets, the physical assets now. You said you are going to teach us the practicality of the fixed asset. Okay. Okay.
These things I was telling you. I done what I wanted. Don't block my phone.
Okay. 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 Thank you.
Yes, sir. Yes. No comment on it. Plant and machinery. Lease, lease, uh, lease free. Yes.
Sixteen, 16 to 80.
2002.
Mm,
No.
Inventory.
What about you
Inventory
too?
is there. Okay, no comment. It's not. Yeah. Let's
Why are we not having
explanation.
thank you, sir. Why are we not having this old property as non-current asset? This old property, why are we not having it as non-current asset?
It's already done.
Oh, so we don't need to put it under financial position. Okay. Okay. Sorry. I'm putting that on.
Yes, sir. It's, it's the R and D, I believe. Mhm. Yes. 760 for our workings. Yes. Yes.
Did you return the silver? Where did you put it before?
4,000. 1, 2. I think we have depreciation. Yes. Yes. 20% of, yes, 20% of the question. In the question, in the tribal, in the additional information. Yes. Yes, yes, yes. Yes.
Goodness, I am not recording the voice all this while.
Oh, sorry, so sorry. So
Oh,
sorry, sir.
and I don't even.
Sorry.
Does anyone remember? Can anyone remember where I mentioned earlier that I should excuse me? Someone should just try to remember that place. I will do an overall revision on it. I'll do an overall revision on it so I can mention some of the things that, oh God, I forgot to unmute it. And that's for the recording. Okay, fine. So this 160 million, we are 160 million. We started spending that 160 million from when? January. Bah? Am I right?
From
Yes.
Yes.
point of view,
Yes.
We started spending 160 million from January, and we spent it up to March. January, February, and March. That was what we expensed, right?
Yes.
Yes.
Now from April, it will become what? An asset.
Successful.
It Since it will become successful, don't forget, before you can capitalize your development costs, before you can capitalize it, you have to be sure that that project, that research will be a successful project. So from April, we were confident it would be a successful project. So every 160 million we spend from April till the end of the year, till the end of the accounting year, is a capital cost. Does that make a sense? Any cost we spend from April, don't forget, from January to March, we expense it, right? But from April, they are telling us that it will become a success. So which means
Yeah.
May, June, July, August, and September, when we close the account, that amount has to be capitalized. Do you understand? Is anyone there?
Yes, sir. We
Yes.
are with you.
So that amount has to be capitalized. From April to September, we have to capitalize it. All right. So
Okay, sir.
additional R&D capitalized. So the R&D capitalized,
960.
which is from April to September. Do we understand, please? Do we understand? Where is this R&D that I expensed here?
This one we prorate, we use 3 all over 1 all over maybe 3 months for the
This
yesterday
is
that we do.
R&D expense.
Uh, 3 months.
So this R&D expense is from when? January to March.
Oh, March. Okay.
So if we spend money from January to September, do we only record January to March? No. January to March is to be expensed because as at that time we were not sure if the project will be successful. But now that we are sure it will be successful, which is from April to September, then we have to capitalize it. All right? And that is how much? 160 multiplied by what? 6 months.
August.
Do we understand?
Yes.
So 160 for 6 months is how much?
960.
Hey, someone did not tell
960.
me.
9.
This is my carrying amount. That is 960 back.
Yes.
960. Then what else do we have? Hmm? Any other thing on this? Any other thing?
I think that is all.
Now no, that's not all. Let me show you. In this question, they told us that 4 million, 4 billion further costs, right? In addition to the capitalized expenditures for this 4 billion, a further research and development were incurred commenced in October. The research stage is 280 and 160 million. On April, we are confident up to September. Now, capitalized development expenditure is amortized at 20%. We've done the amortization of the existing one. This amortization, have we done for the year? No. We've not amortized this new one. I mean, this 40,000. We've not amortized it for the year. This is amortization, accumulated amortization. Amortization as per TB. Do you understand? Do you understand? Does anyone understand that?
Yes, sir.
Yes, sir.
This amortization, this 1,200, is it not from the trial balance?
This is from trial
Is that
balance.
not the one from the beginning of the year?
It's the one from beginning of the year.
So we need the one for the year now. Have we amortized the assets during the year? No, we have not.
No, no.
So we have to amortize it, right? So we have amortization
20%.
for the year. What's amortization for the year? That one will now be 4,000. They already told us that 4,000 multiplied by 20%. They gave us the one for the year. And that will give you what? That should be 800, if I'm not mistaken. So since it is amortization, please, we have to deduct it. Do we understand, please? So that's amortization for the year. Do we have any other thing? No, I guess no. So what do we have? This plus this plus this. And that gives us 2,960,000. This is our balance carried down. All right. So my capitalized development cost, that is expense now. I mean, that is to be capitalized development expenditure is what? 2,960,000. 2,960,000, 2,960. Any question from anyone, please? And shall we proceed? We have less than 20 minutes to complete this class. Shall we proceed, please? Okay, so this is my PPE, my NCA, non-current asset, which is at 19,240. Now, what about my current assets? What are my current assets in the question? Anyone?
We have inventory and
Inventory.
trade receivables.
So, do we have any additional information on the inventory?
No.
No,
So, inventory. Is it the closing inventory or the opening inventory?
Closing inventory.
closing.
Closing inventory. How much is the closing inventory?
Let's see.
4,000.
Where do we have it? Okay, so the closing inventory is 4,000. Then trade receivable is 8,620, right?
Yes.
Yes.
4,000. Trade receivables
8,620.
What about bank?
8,620. We are coming to bank now. What happened to bank? Do we have bank?
Yes,
So this bank now, is it an asset? Is it a current asset?
it is a
Yes.
current asset now.
A bank that is on the credit side is a current asset.
It's not a current asset.
Eh? A
Okay.
bank on the credit side. Is your asset supposed to be on the credit side?
No.
No, asset
So if you
supposed to
see
be
a
on
bank
debit
on the
side.
credit side, what does it mean?
Overdraft.
Overdraft.
Bank overdraft now. That's our bank overdraft. All right. So any other assets?
None.
Any
No.
other current assets? None. Okay. You know that I can deduct my current liability from my current asset, and I can deduct my current liability from my total asset. Do you know that? Sorry, don't let me take you to that side. So what do we have in
Don't
total
take
here?
what you.
I have it to 12,620. All right. So what's my total asset? What's the total asset? Let me underline it. This plus this, and that gives me 31,000.
31,860.
So 31,860 is my total asset. All right. So let's
Yes.
do the liability aspect as well. No, I want to do. No, I don't want to do this. I want to deduct my current liability from it, so I can have my current liabilities. What are they?
Current liabilities.
Yes, please. What are they?
Payables.
Trade payables. How much is that? How much is our trade payable?
Tables.
We have 4,760.
4,470.
4,760. Right?
Yes.
Okay. Any other thing
Bank overdraft.
before
We
bank
have
overdraft?
That's
See,
yes.
non-current asset.
look at it. Trade payables and provisions. We have a provision now. There was a decrease in our provision. For those of you who were there yesterday, there was a decrease in our provision. Provision for bad debt. Where is it? Where is our provision for bad debt? Here, in our admin expenses, additional information 1, where we have a contingent liability, and we made a contingent provision. We said we made a provision of 80 million, right, as our liability. Am I right? You can see my screen, everyone, right?
Yes.
So we made a contingent provision of 80. What happened to it? What happened to it? What happened to it? What happened to it? We reduced it. Did we not?
Yes, we did.
So since we reduced it, how much did you reduce from it? 60 million. right? We remove 60
Yes.
million from it. That 60 million that we have removed from it, don't forget that 80 million before was a provision in our liability account. So that means the whole 80 million is already in the account, right? But now we need to remove that 80 million from the account and put in 20 million. So which means from this liability, from our trade payables, let me do trade payables account. Hey, where is my note 7? Note 7 is, oh God, note 7. Sorry, please. Note 7. Now, what's in my note 8? So now let's do note 8 for these trade payables. Note 8. Now, for trade payables, we have as per TB. How much is as per TB? Who's giving me the figure? How much is that as per TB? 4760. Nobody is talking now on 4760, right? Less decrease in provision, which is how much? 60. Our provision has reduced by 60, right? And that is this 80 minus 20. 80 minus 20. All right. So what's our liability now?
2004.
Sorry, 4700. Is it 4700? Nobody's
4,700. 47.
okay. So we have 4700. So that's my note 8 back. What else do we have, please? What else do we have? Yes, after someone mentioned bank overdraft, right?
Yes, I mentioned back to budget.
Yeah, what was our bank overdraft? 60 or how much? 260. I
260.
think it was 260, Nabi. Yeah, 260. What else do we have, please? What else do we have?
Tax.
Thank you. We have a deferred tax. Thank you. We have a deferred tax. So in our deferred tax account, I thought we calculated it as well, right? So what we have is as our
Yes.
deferred tax. Now we have a current tax of 2,280,000. Abi?
Yes.
So that current tax also is a tax payable, right? So current tax
Yes.
2,280,000. Abi? Any other
Yes.
thing? Any other thing? Any other
That's the
thing?
fat tax.
No, we've considered our deferred tax now.
But there's a difference between the fat tax, which is 40.
What do you say?
I said there's a difference between the deferred tax then they gave us in the
So
additional
our
information.
deferred tax,
One was
now this is it. Now the current tax is a current liability, which means we have to pay it within 6 months, within a year, right? Am I right? That's for current tax. Current tax has to be paid once you close your account and your financial statement is done. Within 6 months of the accounting year end, you must pay your current tax. But your deferred tax can be deferred for more than a year. So which means your deferred tax is a non-current liability, not a current liability. Do you understand?
noted, noted.
Aha. Shall we proceed now?
Yes. Come again. Are you coming again?
Deferred tax is long-term in nature. Your deferred tax can spend more than 5 years with you, but your current tax is less than a year. You have to pay within a year.
Okay.
So your deferred tax is a non-current liability. Yes, someone raised up his hand. Go ahead, please. Ask your ask. Okay, no one is there. Now, what's the total here, please? Yes, what's the total? So my total asset is current asset. Oh, my total current asset is 7,240, right? Now this 7,240 let's see it from here. What do we have? 24,620. Are we there?
Yes.
Okay, 24,620. Let's see if we are correct. Now, this will give you your capital employed. Total asset minus current liability will give you capital employed. Total asset minus current liability is capital employed. Now, this capital employed is financed by what? What will finance this our capital employed? Number one, our
Share
equity,
capital.
right? So for equity, let me just write equity and no, I'll not write equity and non-current liabilities together. I'll separate them. So for equity, what do we have in equity?
The share capital.
Yes, which of the share capitals?
Ordinary share.
Because we also have preference share, abi?
Yes.
So ordinary share capital is how much?
10,000.
10,000.
Retained earnings.
So okay, to make it easy, I can as well bring in everything I have here. 19,340. Sir?
Yeah, 19,340.
So I can as well bring this 19,340, or I just pick them: ordinary share capital, this; retained earning, this; revaluation surplus, this, and I put them like that. Okay, so
Yes.
that's it. So ordinary share capital is 10,000. Retained earnings, we have done the calculation, so you are just bringing the balance brought down. Abi, retained earning
Yes.
was how much?
8240.
8240. Thank you. 8240.
Evaluation surplus 1,100.
Revaluation surplus. Is it
What?
surplus or reserve?
Reserve
Evaluation reserve. How much?
1,100.
Any other thing?
That's all.
So that is my total what? There's total equity,
19,340.
right? That's 19,340. And then non-current liabilities. Abi?
Yes.
So what are the non-current liabilities?
You have deferred tax.
Tax.
I'm coming. I want to do something. Permit me to do it like this. No, I'm not doing it like that. So we have our deferred tax. Yes. How much is the deferred tax? But why deferred tax? Why should deferred tax come first when we have preference share? Why should deferred tax come before preference share? Our preference share is 8% preference share. If I have not forgotten, let's confirm. 8% redeemable preference share at ₦1 each, right?
Yes.
So let's have that. So what's that 8% redeemable preference share? Let me cancel the amount. Yes. How much is that? How much? I think we've done the workings on this. We have additional information on it now. What is our redeemable preference share? Where is our redeemable preference share? We worked on it yesterday, right? Am I
Yes,
right?
we worked on it yesterday.
Now, where is it? What aspects? Where did we work on it yesterday? When we're doing finance cost,
Finance.
right? So in our finance cost, yeah, we have finance cost for it at 240, right? How much is our redeemable preference share as per TB?
Yes.
Let's use as per TB. Let's do the workings. That will be note 9, bang. Note 9. So what's the redeemable preference share as per TB?
4,000.
As
4,000.
per TB. 4,000. Okay. So what happened again? Yes, what did we do to it? We have another preference share during the year, Abby. Right? We have an interest here now for our redeemable preference share, which is under our finance cost. The finance cost of 240. We have it now. Do you remember the one that was issued during the year? The value still remains that amount, right? But we paid 240. Do you remember? Where is that information safe? Redeemable preference share. Where is the additional information? Information 3. Right? The redeemable preference share were issued on the 1st of April 2018 at par, which is at the end of the year. This is 2018. 2018 is for next year. Right? So they are redeemable at a large premium that gives effective cost of 12%. Right? So 12% of this redeemable preference share. Now it was issued out on the in April 2018, and we closed our account in September 2018, right? So they said the redeemable preference share were issued on April 1st. They didn't give us. So which means we have 4,000 redeemable preference share that was issued at 12%. And April to September is 6 months. So that's how we got the 240 yesterday. For those who can remember, right?
Yes.
Yes.
Are we there?
Yes,
Yes,
sir.
sir.
Uh-huh. Then also, what else do we have? That one is for the new one that was. Oh no, don't let me do this one first. This one is the finance cost for the year. Is the finance cost for the year from the new one, redeemable new share. Finance cost from new issue. The one we newly issued out is the one that is giving us this. I don't know if you understand. That new issue is the one that gives us this. But of course, the one of 8% at the beginning of the year, interest for the year on this 4,000 that we have, maybe is 8%. This 8%, we still need to do it because this one is existing since 2020. Do you understand? This one has been there since 2020, this 4,000, and we have been doing it at 8% every year. So that one also has to be there. So 4,000 at 8%, which means this one of 4,000 this 8% was with us for 6 months, while the remaining 12% was for the remaining 6 months. All right, so this one will be 4,000, which is the one we had before, times 8%. But this one was at 8%. The initial one we had was at 8%. This interest for the year is in the TB, in case you are looking for it. It was at 8%. All right, so 4,000 times 8% will give us what? This is calculating for us. 4,000 times 8% times,
150.
sir,
150.
160.
One. Yes.
Okay, so 160 naira. Yes, go ahead with your question, please. So
Okay,
this
sorry, sir.
interest now
So
is
why
for
are
the
we still
year.
multiplying 50 over
Sorry,
12?
I didn't hear you.
Why are we still multiplying it by 6 months?
Because this 8%, they got it for 6 months. Why the remaining 6 months, they got 12%. So this 12% was an interest rate we collected. All right, this 12% is like an effective interest rate. All right, for the remaining 6 months. Do you understand? This is for the remaining 6 months. I hope you are with me, sir.
Yes, yes, yes.
Yes,
Uh-huh.
sir.
But we are still lessing that of 8%. We are lessing that.
I don't understand what you said.
I said we are removing that of 8%.
We are removing 8%.
No, I mean the figure of that of 8%. 4,000 multiplied by 8%. That 160. We are removing it.
Yes,
I
that
just want you to
160.
clarify.
Yes, we are removing
Yes.
the 160. It is a payment. It is a
Okay, it is a
payout.
payment.
Yes.
Okay. So that of finance cost is now what?
I didn't get what you are saying. No.
That of finance cost. That one is what?
That one is also interest for the year.
No, so that one is not a payment, right? That's what I just want to be clear with.
Okay. Now, so let's take it one after the other. The 240 is also a payment for the year, right? It was our finance cost for the year, right? Now, hello
Oh,
everyone. Hello.
Hello, sir. Hello, sir.
yes, I.
Are we together, please?
Yeah,
Yes, sir.
yeah,
Yes,
yeah.
sir.
Okay. Now, this our which one was done during the year now? During the year, we have this 6,000 that was paid out, right? Then also during the year, all right, we got a new 8% redeemable share of 40,000. Okay, so this is what I'll do. Let me bring this down. All right, the new issue itself. What's the new issue? 4,000, right? Am I right? 4,000 was issued newly at how much?
4%.
At 12%, right? And it was issued during the year, right?
Yes,
Yes,
Am I right? That
yes,
4,000 was issued during the year at 6 over 12 months, right? So the new issue now, hello.
hi.
yes.
So
I'm,
that
I'm.
Yes.
4,000 that was issued during the year was at 12%, right? So which means we have a new issue. How much was newly issued now? 4,000 times 12% is what? 4,000 times 12% is what?
240.
Eh? 4,000 times 12%, 240. Let's confirm. 12 times 4 is 48. Oh.
Sorry. No, not 240.
Uh-huh.
Not
So it will be
240. Sorry.
480.
Before it.
It will be 480, please. So now, we issued out a new 480, right? And then we had a finance charge of 240 out of it. So what is our total? What are you saying, sir?
Continue. You can continue that.
Okay, so this is our balance carried down. So this is our balance carried down. All right. So I have for note 9, redeemable preference share. So let me just write preference share here so that I can have a space to write it. Note 9. Right? So what do we have there? We have 4080, right? 4080. Yes, apart from our redeemable preference share, what else do we have? What else do we have? Someone mentioned something earlier, deferred.
Oh, you are not seeing your screen again. No. Is it
I
my
really have not
network?
changed my screen. It's your network, sir. I've not changed my screen. So we
Okay.
have deferred
I can
tax
see it now.
liability. So for our deferred tax liability, what do we have on it?
1.2, 1,200.
Okay. We did the calculation before, right?
Yes, but they also said
That the new amount is
they
1,200,
yes,
right? So
yes.
that is the amount that we recognize in our balance sheet 1,200, which is the new value of our deferred tax. Any question? Yeah, come in. Any question, please? So I guess we can wrap up here, and then this plus this will give us, oh, we have the same figure, which means this is how we have financed our business. Any question from anyone? Any question from anyone? Yes, go ahead, please. Go ahead, please. Go ahead,
Yes, sir.
please.
I hope this it will be sent to the group,
I'm
the
sending
link.
it right away, sir.
Okay. So that we can download it.
Any other question, please?
Maybe
Okay, so
when we master it, if you have any question, we can
okay,
reach.
so let's do it that way. Master it, and then when you have any question, I was trying to remember where uh, that part where I talked about what's it called? Where I silenced the phone, where I took an excuse. I can't remember that part. I can't remember what we're discussing as at then.
That time we are under, I think under PPE
Education
schedule
and
now.
amortization.
So if it was under PPE schedule, right? So for a PPE schedule, like I told us, our PPE schedule has to do with the total of our leasehold and plant and equipment, right? So all these are added together. So this is what you will do for me, right? Let everyone go through it. Okay, whatever we get in between, please let me know. All right, because I think, okay, no, I can't remember, Sha, I can't remember, but I think I can't remember what happened. So let's confirm whatever it is when we share the video. If there's any part you don't understand, please just reach out to me. I'll explain that. All right. So this is what we have today, and okay, let me be sharing this
Sorry,
one after the other.
sorry.
Go ahead, please. It's already nine
Yeah,
o'clock, and we are wrapping up.
I don't want to see the calculation of number 9, note
I'm
9.
sending it to the
You
group as
send
well,
it
please.
to
Just hold
group.
on. I'm sending
Okay.
it. All right. So good night, everyone. See you all in our next class.
Thank you. Thank you so much. Good night.
Thank you so much.
Thank
More wisdom.
Good night, sir. And you too. So I sent an information on the new ICANN syllabus. If you have question, please go and deal with ICANN. All right. So good night, everyone. Bye bye.